Hey, what's going on, everyone? I want to recap the basic strategy that I've been trying to teach here on YouTube for quite some time now. I think that this strategy will help you guys, get closer to passing your prop firm evaluations, get closer to taking those payouts. And it's a strategy that's simple enough that you can kind of implement it on a day in and day out basis. That's using the 20 SMA. Along with short-term change in trends, using like a 1-to-1 kind of risk to reward ratio on this specific strategy. Now, again, doesn't matter what size your account is, you can definitely dial it down or, scale it up depending on the size of your account. Now, I always do recommend starting slow, trading 1 to 2 micros at a time and just trying to target consistency over profits. Again, I think that a lot of traders, especially people who are trading on the prop firm side of things, are targeting dollars over consistency. And again, that's a big red flag. It's a big no-no. You have to do this business for a long time. You have to do this, the same type of repetitions over and over and over before it becomes muscle memory. You can't just wake up one day and say, I'm going to try this and I'm going to try that and I'm going to try that. A lot of traders, especially retail traders, are so lost in their own, learning that they're jumping around so much between so many different strategies and so many different YouTube pages and so many different Discords and so many different courses that they have no idea what the hell they're doing at the end of the day, because they remember a little bit and piece of this guy, they remember a little bit and piece of that course, they remember a little bit and piece of what worked for them personally before, and then they just stir it into this mumbo jumbo pot, and they have no consistency as far as risk, they have no consistency as far as time of day that they're looking to trade, they have no consistency over their life and trading altogether, right? So again, all in all, more so than a strategy, before I actually get into showing you guys a couple of strategies that worked here and some of the ones that didn't, because again, do they all work? No, of course not. But one of the most important things is if you can't find a level of consistency outside the screens, like, whether that be with your health and fitness, whether that be in your personal relationships or your personal 9 to 5 or your personal, finances or your personal, daily routines or whatever it is that you guys do on a daily basis, if you don't have any consistency and you're just kind of, all over the place, where the heck do you think your trading is going to be? It's going to be all over the place. Again, a lot of people glorify trading as if it's some very cool job, or it's, oh, everyone's trading on a beach, from a laptop, on a yacht, from a penthouse, from a skyscraper, from wherever, right? Guys, this is just in the regular old 9 to 5, just like any other thing. Now we have more opportunities to kind of scale up our income as our skill levels get better, of course, but at the end of the day, you still got to put in the time. At the end of the day, it's very mentally draining, and it's a mental roller coaster that if you, allow this beast to not be tamed, it will definitely take over and ruin your life. I've seen a lot of people, spin their wheels in the mud for years and years and years and still never figure it out, and only to realize that it was not the charts or the strategy or the markets or the market makers or anything altogether. It was in fact themselves, that their own personal lives are so, all over the place. Their levels of anxiety are sky high outside the charts. They're unhealthy as far as, again, and I'm not sitting here saying, I'm the healthiest person, I do this. I'm not, some freaking, all-American gladiator or anything like that. But I'm saying I try to, do things the right way, the best that I can without, being, completely compulsive, right? Or obsessive. But again, with that, if you don't start practicing levels of discipline and consistency outside the charts, it's going to be very, very hard. So again, let's just get into this. I always try to start my day around 5:30 a.m. Pacific Standard Time. Why? We've got data, we've got news, we've got headlines that start to come out at 5:30 a.m. You can typically catch some very, very good moves. So futures markets open 23 hours a day. We don't need to wait for 6:30 to catch a move. This is not like trading, options, right? The background and field that I come from, where I can't even, get into the markets until after 6:30. And even at 6:30, it's a pain in the ass to get filled. We can get filled 23 hours out of the day. Now, I don't recommend trading the overnight session that much. It moves, are very, spontaneous and sporadic. And it's just, a pain in the ass to kind of sit there and watch paint dry. But my day will open up at 5:30 in the morning, and I try to be done by 10, 11 o'clock, typically closer to around 10 a.m. my time. So there's a good 4.5 hours where I'm kind of actively watching the charts, and then everything else after that I'm kind of looking at for the next day. But you can see here 520, we get this short setup here below the 20 SMA. Now we did have this 200 SMA sitting right below it. Immediately at 530 kind of takes that out. Now you could have taken this big sweep candle here. It does consolidate for quite some time here, almost 45 minutes, and then we start to get that breakdown. Technically this is an active 20 play, right? 20 play sets up here. You should have taken profits on the first move down and cashed out. It is what it is. It does consolidate. Your next true setup would be a breakdown here off the market open, right? So if you put in this first low here, we consolidated, we tried to backtest the 20 SMA. As soon as we started to break down through this overnight session lows, you needed to have taken that off the bell. Now again, I took this little bit of a short position here and I took it right into this linear regression, only to see that the market continued to flush a lot lower. But again, it is what it is. I'm looking for a quick move. I'm looking to take profits into demand. I'm looking to take profits into supply. So again, yes, sometimes I'm going to miss out on these type of moves. That's okay. The next play that we get here is a 20 SMA play to the long side. Again, just to kind of recap, the market has been doing this the last 3 days in a row. It's tried to put in one leg down, consolidates, tries to backtest, puts in that second deep pullback, consolidates, fails to make a new low, and starts to reverse. It's done it 3 days in a row. Go back and look at the last 3 days. It's done it. And if I go back more, it's probably done it more than that in the last couple of months. But again, battery is about to die here, so let me finish this video very, very quickly. As we started to get this deep pullback, we got to get the close over the 20 SMA here, which is a 28-point range here. You would have gotten paid at a 1-to-1. The high price here was 17,832. So just kind of mark this out. This is your stop loss. This is your entry. As soon as a following candle confirms the reason why it's high price, and you're looking for 28 points up on the upside. Again, it doesn't have to be exactly 28 points, guys. If you're happy with 20 points, 21 points, 25 points, take your money, okay? But what I'm looking for is my stop loss is there. That's my absolute max pain. I want at least something close to a 1-to-1 at 28 points. The next play that sets up here is a short play that does confirm here, does close over. You would have gotten stopped out here if you were that much of a stiffler. Again, because again, if we're going to follow rules, we got to follow rules. We would have been stopped out for 12 points here on the short position, but it does set up back again for 16.5 points. That does hit at a 1-to-1. So you immediately got that 12-point loss back and up 4 points on that. You would have taken the 28 points on this. So total, all in all, you should be up around 30 points on the day in the last setup here at around 1040. Because again, remember, I only like to trade to like that lunch hour time when we start coming out of that lunch hour. This play also did confirm for 17 points that would have hit as well. Again, I know a lot of my guys took this trade late in the day. I was not even around trading the markets at this day because again, I felt like this was such a long week. I've just mentally taxed and exhausted. But again, this play here set up into the close 1145, taking out this prior swing low. Again, I like to look for these plays when you put in a big deep pullback like that. You try to bounce, you consolidate, you put in a higher low, and then fail to get really any type of confirmation. As soon as you lose the prior swing low, I want to be short. And again, I know some of the guys in my room did take this short position into the close. It was also an active 20 play. Now, again, it was an 80-point range candle. So again, if you were going to trade that, you might have needed to tighten up that stop, cut it in half. Maybe, if it's an 82-point range candle, or 89-point range candle, we got to cut that in half. We got to go 30, 40 points as a stop loss, and then kind of ride that down. If we can manage to capture 30, 40 points, let's do it. And at that point in time, it actually did move down around 45 to 50 points. So it would have been a 1-to-1 on cutting the range down in half, right? So our range that I would have liked to use, if you see this black line on my screen that I'm going to start to highlight in yellow here, this is a linear regression. That's where my stop would have been, because just by visually looking at this candle, right, I'm going to cut this range in half, and where's that at? My linear regression. So if I was to come back up and get over the linear regression, I got to cut that trade and get the hell out of it, because we could be looking to take out the swing highs here and go higher. So again, this trade did work, but again, I'm not really a fancy to take that trade, this late in the day. But again, my laptop where I'm making this video is about to die, guys. I hope you guys enjoyed this video. Make sure to like, comment, subscribe, and I'll see you guys on the inside.